If you want a portfolio that beats most investors without requiring you to become an expert, the lazy portfolio might be your best starting point. Simple, stable, proven, and perfect for anyone who wants their money to grow quietly in the background. Why most investors underperform. Most people lose money in the markets for one simple reason: they trade too much. They buy when things feel good. They panic sell when things look bad. They overthink short-term moves and forget the long-term trend. But the lazy portfolio does the opposite. It removes emotions. It removes guessing. And it follows a system that has historically outperformed the majority of active investors, with a fraction of the effort. The actual lazy portfolio breakdown. So what does a lazy portfolio look like? Here's the most popular version. 1. 60% total stock market index fund. This gives you exposure to thousands of companies, from tech giants to small businesses. When the US economy grows, you grow with it. 2. 20% international stock market index fund. This balances your portfolio with companies from Europe, Asia, and emerging markets. So you're not relying on one country's economy. 3. 20% bond market index fund. This is your safety net. Bonds protect you during recessions, soften volatility, and help your money stay steady even when stocks fall. And that's it. 3 simple pieces that have historically outperformed most complicated portfolios. Why it works. The lazy portfolio works because it's designed for long-term wealth, not short-term excitement. Heavy checkmark low fees, which means more money stays in your pocket. Heavy checkmark diversification, avoiding the risk of one bad stock ruining everything. Heavy checkmark market growth, you ride the long-term upward trend. Heavy checkmark zero emotions, no panic, no hype, no stress. It's simple, but incredibly hard for people to follow. Because the strategy is boring. And boring is exactly what wins. How to maintain it. Maintaining this portfolio is almost too easy. You rebalance once or twice a year. If stocks grow too big, you shift a little back into bonds. If bonds grow too much, you shift money into stocks. No predictions. No gambling. Just tiny adjustments. 5 minutes of work, for decades of results. If you want a portfolio that beats most investors without requiring you to become an expert, the lazy portfolio might be your best starting point. Simple, stable, proven, and perfect for anyone who wants their money to grow quietly in the background.